Now let's go through another case where it involves a man named Alex Tillman, and he's a small business owner with a flair for fashion and a keen eye on success. Now Alex believed that presenting himself in a polished image was essential for business growth, so for one tax year he tried to claim these deductions: $1,800 for haircuts and manicures, $2,600 for gym memberships, $830 for cell phones, $4,600 for clothing, and $280 for laundry. Now let's look at the timeline of events right here. So during the year, he spends money buying these personal grooming things, fitnesses, cell phones, clothing, laundry, and he believes these are essential for business. And then he files it on his tax return and he claims business deductions for these items. Then a couple years later, the IRS sends him an audit notification. And the IRS is just questioning the legitimacy of his expenses. And during the audit, the client, Alex, argues that these expenses are crucial for maintaining a professional image and thus should be deductible. So after the audit, the IRS has made their decision and said none of these expenses are deductible because they are personal expenses. So, of course, Mr. Alex goes into tax court. And this court case is called Tillman versus United States. Now let's go through what the court findings were in this particular case. Now for the court's finding, they actually went through each expense that he tried to claim, and this is what they said. For haircuts and manicures, they said that haircuts are non-deductible personal expenses even when required as condition of employment. The same is true for manicures because such expenses are inherently personal in nature and suitable for general occasions. So the lesson here is that personal grooming expenses are never deductible even if it enhances the professional appearance. For gym membership of $2,600, this is what the court said. Participation in weight loss program can be deductible expenses when it's done for medical reasons. However, the taxpayer's membership to a weight loss club is not a deductible expense. It is a personal expense. So the lesson here is that fitness expenses related to general health or appearance is not deductible. So gym memberships would only be deductible if there was a valid medical reason for it. Now for the cell phone cost of $830, the court has said that the taxpayer is not entitled to deduction because the taxpayer didn't provide sufficient evidence to show proof that the cell phone was really necessary for business use. So what does this mean is that he probably just took his cell phone bill and just totaled it all up and added it as a deduction, but he didn't show the IRS how much of his cell phone use was actually for business versus personal. He just tried to deduct the whole thing. So the lesson here is that without proper documentation, you can't get the business expense. So you really have to show, okay, how much of your cell phone is being used for business versus personal. Now, a good way to think about this is that if a client actually has two cell phones or maybe one phone at home for personal and then a cell phone for business, then it might be easily arguable that, okay, all personal stuff is taken on the home phone and all business stuff is taken on the cell phone. Or if you have two cell phones, one is for personal, one is for business. So that's easy to distinguish. So making sure client understands that you can't just write off the whole cell phone bill. Technically, you're supposed to figure out how much is business use versus personal use. And I normally take a percentage and I ask the client, what do you think the percentage of business use is for your cell phone? Now, Alex Tillman in this court case has tried to deduct $4,600 worth of clothing and $280 worth of laundry. Now, the court says for the clothes to be deductible, they must be of a type specifically required for a condition of employment, or it must not be adaptable to general usage as ordinary clothing. So, did this taxpayer show that? Now, in this court case, Alex Tillman argued that the clothing being deducted was actually so fancy and so expensive that it can't really be worn in everyday life. It could only be worn at very special, specific events that was necessary for business. And the tax court did not agree with any of that. The tax court only looked at the adaptability of the clothes, meaning that is it possible to wear it on a night out with friends or on the weekends? And the court established that the clothing trying to be deducted in this case right here can be worn outside of work. So it's important to note that the court doesn't look at whether the taxpayer or the client actually did wear it for only work itself. They only looked at the adaptability. Is it possible to be worn outside of work? So the tax court actually disallowed the clothing and in turn with that, disallow the laundry expenses as well. So here are some key takeaways that as tax professionals, you should be letting clients know in regarding these business expenses is that you need to understand the distinction and you need to understand, is it personal expense or business expense? And we have to have that clear line to really divide, okay, is this a business expense where it's necessary for the business to have, or is it more of a personal expense and it's really personal in nature? The other key takeaway is documentation is essential, making sure that you are letting clients know that, hey, you can't just deduct the total cost of, say, your cell phone bill, that we have to have documentation to show what portion is business versus what portion is personal. And the last key takeaway point is clients should be aware of ordinary and necessary standards. Is the expense actually a common and necessary business expense that's common in that field? Or is it just a personal expense and they're just trying to deduct it as a business expense using some kind of excuse that's business related, but really it's in essence really just personally related?